Barney Frank, the title of your book, Frank, is fitting because you are nothing if not frank. And the first thing I want to know and get your frank opinion on is the role of government in the U.S. economy.
Well, I think it's a very important role, properly understood. The private sector creates the wealth. That's where we have it. And the private sector requires a certain amount of inequality or it doesn't work. People work harder, people who make better judgments about where preferences are. The role of the public sector with regard to the economy, it's really twofold. One is to provide the rules within which the private sector can operate. For example, during the crisis, somebody had asked Chuck Prince when he was heading Citicorp why he was doing something that was not so smart. And he basically said, because if I don't, my competition will, and I'll lose out. So you need fair rules. The other is there are things that are needed for the economy. In economic terms, you have externalities. Yes, the highways, transportation, a number of these things are important to facilitate the economy, but no individual business is going to undertake them because no individual business has a big enough share. So that's the second part of the government, is to make sure that there is I guess, both a legal and a physical framework within which the private sector can do its work.
Still, what kind of appreciation do you have for those who say that entitlements and regulation are leading America down a dangerous fiscal path? Oh,
I think they're dead wrong, especially since they leave out the worst problem in our fiscal path. That is the massive overspending in the military. We would be $1 trillion less in debt today if we hadn't gone into the war in Iraq. I think, it's important for America to be able to defend itself, to be able to defend others, but this notion that we have to intervene everywhere, all the time, every place, massively overspends. As to entitlements, I think Social Security and Medicare are two very, very important accomplishments. It used to be that old people went into poverty. You can trim anything and make it a little bit more efficient. As to regulation, there are cases where we overregulated. I think Jimmy Carter actually took the lead in deregulating air travel, allowing that to go more freely. I think the deregulation of communications worked. On the other hand, you do need some regulation. I think the financial area is an example. When AIG, a major company, comes to the Bush administration in the fall of 2008 and said, by the way, we owe ultimately $170 billion on credit default swaps, and we can't pay it. What we then did was to adopt regulations so in the future, no company can get so indebted without knowing how indebted it is and having the money to pay it back.
Well, in the book, you defend your role in the subprime lending crisis. The politicians have taken some blame. Banks have taken some blame. The ratings agencies have taken some blame. Do you think that the American public has taken their adequate share of the blame for buying houses they couldn't afford?
No, not entirely, and that's true of some people. Some people were misled, but that is exactly right that people did it. In fact, at one point I raised with the banks the question of why they were being so tough on people who had second mortgages. And some of them said to me, you know what, some of these are people who bought a house and then there was an appreciation through no merit of theirs, and they took out a home equity going to buy a boat. Well, we're not helping them. But on the whole, I think it was an institutional change. I don't think it was so much, well, personal responsibility comes in on all of the above. But here was the deal. 50 years ago, when you borrowed money to buy a house or for a lot of other things, you borrowed it from the person you were going to have to pay back. So if you took out a mortgage loan 50 years ago, you were going to pay that bank back, and the bank was going to frisk you pretty good before it lent it to you. And then money came in, liquidity outside of the banking system from Asia and elsewhere, the oil companies, oil-producing countries. And you also got information technology. So it now became possible to securitize loans. It became possible. So what happened then was the lender no longer was going to pay the price if there was no repayment. And the incentive shifted from making money on the quality of each loan to the quantity. So yes, other people were irresponsible, individuals. But I think the biggest problem was systemic. And the problem was we in government were too slow to adopt new rules for securitization. Now that we have them, securitization goes forward, but without the kind of irresponsibility.
And the government, the Department of Justice, has not sent anyone to jail for a lot of the bank's bad behavior. Even for things like money laundering recently, nobody is going to prison. Do you think the bad behavior is going to continue until somebody goes to prison?
Well, it's been diminished because people are on top of it, and there are some fines. But I do agree with you. You know, I mean, unlike the Supreme Court, I don't think a corporation is a person. And I guess under this Supreme Court, the corporation has a right to make contributions. But I think that, I guess with that article, the individuals have to go to prison. And I think that is a serious flaw. I don't know why they have not prosecuted more individuals. I know part of the reason. I guess part of the reason is it's one of the reasons we had to pass laws. Some of what was very bad behavior wasn't illegal because, as I said, the regulation lagged the innovation in the private sector. But still, there was some blatantly illegal activity that should have gone. One other very important point you made, I want to let go. The rating agencies were abominable. They made stuff up. They claimed to tell people things that nobody could have known.
And then final, one law you did pass, of course, is Dodd-Frank. Jamie Dimon, the CEO of Morgan Chase, recently said that the banks are under assault from laws like Dodd-Frank. Do you have any sympathy for him?
On some specific points, Jamie had a good argument a few years ago that the European banks were gaming the system when there was risk weighting for your capital, and they were underrating some of the risk, but we got off that risk weighting thing. On the whole, no, I'll tell you, and I admire Jamie, and I think he does a great job, and we've worked together on some stuff. I have sympathy in one thing. He took over Bear Stearns at the request of the Bush administration in 2008 to stop what we saw after Lehman. And for him and his bank later to be fined because of bad behavior by Bear Stearns before he took it over at the federal government's request seemed to me unfair, and I said so at the time. On the other hand, I thought Jamie made a big mistake when he said, first of all, he said, in the old days, we only had one regulator. Well, if I were Jamie, I wouldn't talk about the old days too fondly. They made big mistakes. He has to admit that. The London whale, billions of dollars lost. But secondly, and this is my point, he said, now we have 5 or 6 regulators. Well, the answer to that is, that sounds like the Glass-Steagall argument. And I'm not for reinstating Glass-Steagall, but if you're going to be in 5 or 6 different businesses, you're going to have 5 or 6 regulators. You can't expect the bank regulator to also be the one who does sophisticated derivatives. And the other thing I would say is this, as far as the financial sector being under control. In March of 2009, when we began this, the Dow was at 6,500. It's up about 280%. So it's hard for me to feel terribly guilty about what we did to them.
Thank you, Barney Frank.
Appreciate it.
Thank you for watching The Street.